You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer.
Hi there, it's Victor here from foreshowmarkets.com, and in today's video I'm going to be showing you how money is made in a falling market. Okay, this is a follow-up to the previous video we did on how money is made in a rising market. Okay, and in that video I said the main reason why we are trading or investing in the forex market or financial markets, doesn't matter whatever you're trading, crude oil, gold, currencies, right, metals, right, our number one aim is to make a profit. Okay, and I also said that some people are unknowingly to them just in they want to make money, but they get carried away by the adrenaline rush, okay, and all the activities of just being busy in the financial market. Okay, so we want to look at how money is made in a falling market. A lot of people usually ask me the question, Victor, with this coronavirus and all the market crash and everything, are you still making money? Okay, they ask me questions like, or they make statements like, okay, you know what, I want to invest, but with this coronavirus crisis and the global economic crisis, let me wait until all of this is over. Okay, and that just makes me understand that people do not really understand what the forex market or the financial market is all about. It doesn't matter if the market is rising or if the market is falling, right? We as traders, we do not care because we make money either way. As a matter of fact, right, since the start of the coronavirus pandemic, January to April, we've made more money, right, in the Purity Alpha investment fund, much more money than we made before January. Okay, that simply means that to us, the crisis, the global tension, the crisis, a falling market is an opportunity for us to make even more money. Okay, so how money is made in a falling market is a bit tricky, but I'm going to break it down and simplify it so you can understand it. Okay, so come with me to the slide. Okay, so how is money made in a falling market? Example, when there's a recession in your country or in global economy. Example, gold prices falling. Example, crude oil prices falling as low as $11. Okay, and some people think, these people are really losing money. No, there are people making money by just being able to understand that the market is falling and they take the right side. So let's see practically, right, in a simplified way, how does this work? All right, so you have done your analysis, okay, and you know that the market is not going to rise. You know and you believe based on your analysis that the market is going to fall. Okay, so let's take an example now using the naira and dollar exchange rate. And so let's say, as we see here, that $1 is equal to 400 naira right now. And so maybe you're looking at the whole crude oil and the whole coronavirus issue like we did in January. Oh, sorry, not this is the reverse. I think I take that back. This applies to the rising market. Okay, but let's just say that you've analyzed the market and you feel that the exchange rate is going to fall from 400 naira per dollar to 200 naira per dollar. That means that the Nigerian economy is doing better. It means that the naira is getting stronger. Okay, so you did your analysis and you strongly believe that that value is going to drop. So what do? I usually tell my students that in a practical market, you buy before you sell. But in the forex market, there's something called short selling. Okay, there's something called short selling. So if you believe the market is going to fall, you can sell, then buy back. But when I tell my students that you can sell before you buy, the question I usually get is, how do you buy? How do you sell what you didn't buy? It sounds logical. You cannot sell what you didn't buy. Okay, but here's the answer I usually give them. you can sell what you borrow. Okay, and so the forex market has the facility powered by the brokers. Example, we are using FXTM. So FXTM gives us that ability or that facility to borrow an asset, example gold, crude oil, or currency pairs like euro, dollar. You don't have it, but you can borrow it, okay, sell it, right, hold the value in naira or whatever currency. When the value drops, you buy it back at a cheaper rate, right, and then return what you borrowed back to the broker, and that will leave you with a nice profit. But let's look at it practically. So let's say, for example, you know that the naira exchange rate is going to drop from 400 lower to say 200 to 100 naira per dollar. So what you do first of all is that you borrow. So you want $1,000, so you borrow $1,000 from the broker, say FXTM. So you borrow $1,000 from FXTM. You don't have it, but you can borrow it. Okay, then immediately you borrow that $1,000 from FXTM. Okay, you sell it at the prevailing exchange rate, which is 400 naira to $1. So if you sell $1,000 at this exchange rate of 400 naira, you will immediately have 400,000 naira. Okay, you borrowed $1,000 from FXTM. Okay, sold it immediately, and you have 400,000 naira. All right, now you wait. Okay, as a speculator, you wait for that value to drop. Okay, and just as you expected, so let's say you waited 3 months to 6 months, and then you saw that value drop from 400 naira per dollar to 200 naira per dollar. Now your expectation has come to pass. So what do? Now you had 400,000 naira. So out of that 400,000 naira, you take 200,000 naira and you buy back the $1,000 which you initially sold. Okay, you buy it back at an exchange rate of 200 naira to $1. Okay, and so you have your $1,000 back, but this time you bought it back with 200,000 naira and not 400,000 naira. So that means you are left with a profit of 400,000 naira, which you had initially. Then you subtract 200,000 naira, which you used to buy it back. Okay, so you now have 400,000 naira minus 200,000 naira. That gives you an excess of 200,000 naira. That is your profit. And then at this point, you have 200,000 naira profit, and you still have $1,000. You still have the $1,000 in your hand and 200,000 naira profit. So what do you do at this point? You take the $1,000 you borrowed from the broker, being FXTM, and you give the $1,000 back to the broker. And at that point, you say, it was nice doing business with you. Let's do this again another time. So you borrowed $1,000, you returned $1,000, but you still have 200,000 naira excess, and that serves as your profit. And that is the simple concept of short selling. Okay, short selling simply means that you can sell what you don't have. Yes, you can borrow it, sell it, and then buy it back at a cheaper rate, return what you borrowed, and then you are left with a nice profit. All right, so let me take it that simply again. You borrowed $1,000 from the broker, sold it at the exchange rate of 400 naira to $1. You have 400,000 naira. You waited for it. After 6 months, it dropped to 200 naira per dollar. So you bought back $1,000 at a cheaper rate, and you spend just 200,000 naira to get back that $1,000. Okay, and you return the $1,000 to the broker, and you are left with 200,000 naira. And as simple as ABC, that is the concept of short selling. So it doesn't matter if the market is rising or falling, okay, you can make a profit. Now, understand why is this possible? It's possible because currencies are traded in pair. All along, in the two examples of rising and falling markets, we're dealing with dollar and naira. Dollar and naira. You cannot trade the dollar alone. It's not possible. You have to trade the dollar versus something else. Example, naira. Okay, so let's look at a practical example in a real market sense. Let's look at a real chart. So this currently we are these are currencies, many of them, so but we are focusing on euro dollar. Okay, so assets in the currency market are traded in pairs. Example, euro versus dollar. We are no longer doing naira versus dollar, so euro versus dollar. Okay, now this is the chart of euro versus dollar. If you feel that the euro is going to get stronger than the dollar, right, you buy the euro dollar as a pair, and this is the exchange rate of euro dollar. Okay, so if it's going up, you buy to make money in a rising market. Okay, currently right now it is falling. Okay, so just like the naira dollar example, if you feel the euro is going to fall versus the dollar, okay, you feel the dollar is going to be stronger or the euro is going to be weaker, right, you sell the euro. For example, you can borrow the euro here. Let's take it again. You can borrow the euro, sell it, get a certain amount of dollar. When the euro falls, okay, you use that same dollar you sold, buy back the euro at a cheaper exchange rate, then return it to the broker, and then you're going to be left with excess dollars, which serves as your profit. So it doesn't matter if this market is going up or down, you make money. Let me look for crude oil. Let's look for crude oil example. Symbols, metals, spots, XAG, gold. Yes, so this is okay. So let's take this. One minute. So where's gold here? I'm looking for my gold chart. Just give me a minute. Okay, so this is gold. It's loading. This is gold. Now gold is not just traded as gold alone. Gold has to be traded versus the dollar, gold, or traded versus the euro, or traded versus the pound. Okay, so you cannot just buy, you cannot just trade gold buying and selling. No, it has to be paired with something. That is why I said all asset classes, or most asset classes in the financial market, are traded in pairs. Gold versus dollar, or gold versus euro, or gold versus pound. The same thing with crude oil. You cannot trade crude oil alone. Crude oil must be traded versus the dollar or the euro or the pound. So in this example, if you feel that gold is going to fall, then you borrow, you have to sell. So you borrow gold from the broker, sell it, and then when the value drops, you buy it back with the dollars you had you got initially at a cheaper rate, return the gold to your broker, right, and you're going to be left with excess dollars. Same thing applies to crude oil. Let's look for crude oil. Crude oil is under commodities. So click on commodity. So let's use NYMEX, US crude oil. Show it there. US crude oil is currently around $31 to $33. Okay, so let me put crude on. Okay, so people said, still loading. So let's look at history a bit. So this is where crude oil was. Coronavirus issue started somewhere around $40 to $50. Okay, and then the whole issue started, and then crude oil price started crashing. Okay, and so market generally crashes in tension, or when there's geopolitical tensions or recessions and all of that. And that's when a lot of people start thinking, okay, everybody who is investing or trading is losing money. No, smart investors, smart traders apply what is called short selling. So once you know that the value of crude oil is going to drop, you short sell. Okay, and so example, you can sell, you can, let's say at let's look at this, say at $48 here, right? You feel the price of crude oil is going to drop because of coronavirus or because of US-China tensions or whatever. So what you simply do is short sell. And what does short sell mean in this example? You borrow crude oil from your broker, sell it. So example, you borrowed 100 barrels of crude oil at 48, right? That will give you $4,800. Okay, and then you sell it, gives you $4,800, and then it came down to $11. Okay, out of the $4,800, you just need to buy 100 barrels at $11. All you need is 1,100 to buy 100 barrels. Okay, so you buy 100 barrels at $11 and give back the 11 barrels to the broker. Okay, subtract $4,800 from $1,100, that leaves you with $3,700 profit. You made money in a falling market, and it is as simple as ABC. The concept is called short selling. Okay, and that is why we as traders, as investors, we do not care if the market is good, is rising. We do not care if the market is bad and falling. We capitalize on those loopholes, those opportunities, and we make money either way. Okay, so I hope you've learned something in this video. If you've learned something in this video, give us a thumbs up. Okay, and also if you're yet to subscribe to the loads of valuable content we are giving you, click the subscribe button below this video. Okay, and then click the bell beside the subscribe button and click all notifications so you can get notified whenever we upload a new video. Thank you so much for taking the time out to watch this video. I'll see you in the next video. Cheers.